Welcome to the episode. Warren Buffett, one of the greatest investors of all time, is extremely careful about where he puts his money. In this episode, we will go through Buffett's investment criteria and see whether Rollins, the pest control company, would fit into his investment portfolio. Let's go through Buffett's criteria one by one and compare them to Rollins. The first Buffett criterion is an understandable business. Rollins' business is pest control. The company owns several pest control brands and operates in many countries. This is simple and easy to understand, so the first criterion is clearly met. The next criterion is a durable competitive advantage. A competitive advantage is something that protects a company from competitors, such as a strong brand or a dominant market position. Many companies in Buffett's portfolio have powerful brands, like Coca-Cola and Apple. Rollins also has strong brands, especially Orkin, which is one of the most recognized names in pest control. When a pest control company solves your problem quickly and professionally, you remember the brand. Rollins' advantage comes from brand strength, long-term customer relationships, regulatory requirements, and a large service network. The next criterion is consistent and predictable earnings. Rollins has increased its revenue for 24 consecutive years. The company earns money from one-time jobs, such as home pest problems, and from recurring service contracts. For example, restaurants pay for regular pest control every 2 weeks. About 75% of Rollins' revenue comes from recurring services, which makes the business stable and predictable. Pest control is also a defensive industry that people need regardless of the economic situation. The next Buffett criterion is good management. Rollins CEO, Jerry Garhoff, has been with the company for many years and understands the business well. Buffett values leaders who think long-term, avoid unnecessary risks, and act in the best interest of shareholders. Rollins' management fits this description. The next criterion is high return on capital. Rollins does not need factories or expensive equipment, so it can generate strong profits with relatively little capital. The company's return on equity has often been above 20 to 30%, which is a strong level. Buffett likes companies that produce high returns with efficient use of capital. Buffett also looks at the balance sheet. Rollins has a light balance sheet and moderate debt. Most of its assets are intangible, such as brands and customer relationships. The company uses its cash flow for acquisitions and dividends. The balance sheet is stable and predictable. The next criterion is a reasonable price. Even if a company is excellent, Buffett does not want to pay too much for it. Rollins has been highly valued for a long time because it is a high-quality and defensive company. High-quality companies often have high valuations, but Buffett prefers situations where the price is fair. Rollins has rarely been cheap. The final criterion is a long-term horizon. Buffett likes to own companies for a very long time, even forever. Rollins fits this mindset well. It has grown steadily, continues to acquire smaller competitors, and operates in an industry that is not disappearing. The Rollins family still owns part of the company, and family-owned businesses often think long-term. Climate change is also unlikely to reduce pest problems, it may even increase them. Those were all of Buffett's criteria, and Rollins meets many of them. But why hasn't Buffett or Berkshire Hathaway invested in Rollins? The first reason is size. Rollins is too small for Berkshire Hathaway. For a company as large as Berkshire, small investments do not make a meaningful impact. Buffett prefers owning a few large companies rather than many small ones. Rollins would only be meaningful to Berkshire if they bought the entire company. The second reason is price. Rollins has almost always been expensive. Buffett likes to buy great companies at low or reasonable prices. Rollins has rarely been priced that way. Thank you for listening.